Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, January 14th. Good morning to you, Jay, Pete, Ted. Great to see everyone here in the room. So, interesting week. Looks like we're starting to get some follow through on this dollar move. Apologies for having to cut out this week's webinar and next Tuesday as well. For those of you who are interested, I'll be giving an expo. I gave one yesterday at the Money Show. I got another one next Tuesday on Nadex. For those of you who want to attend that, it's going to be the same presentation, but we'll be back here on Thursday. So busy week ahead. Lots to discuss on the menu for today: DXY, Euro, Dollar Yen, Aussie Dollar, Kiwi Dollar, SPX, Dollar CAD, and gold, which has been a complete bummer these last couple of days. Loved the drop, but we've been in complete stall zone ever since. So we'll take a look at those levels. Obviously, any questions or trade setups, as always, guys, feel free to throw it on the message board at any time. So I'm going to take a quick segue and go over the 12th first, and then we'll come back to last night's update just to get the better theme going on here. Here is the DXY weekly, okay? The focus on the drop, remember, was 89.07. We turned 13 pips ahead of that. 89.20, I think, was the low. So I've been trying to sort of gauge short-term dollar strength, trying to get towards 91. Stalled out a little early in the week, but looks like we're getting a nice little rebound here. Here's what it looks like on the daily chart. Okay, we were pulling back. Saw that 88.6 hold beautiful support and then rebound right. Here we are. Focus is still, again, like I said, 91 is still the level I want to see. It's the 2017 low. Really nice pivot last year on the way down. Again, tested here at the December sort of spike high. Converges on the median line. Really nice spot. Sort of the ideal play. Now, again, it's Thursday. The weekly opening range remains intact. Don't want to get too excited on this pop, but it looks all right. You know, here's what it looks like on the intraday. Here's what it looked like earlier in the week. We're looking for support initially 89.93. Bullish inval would have been that 618. 81.93 held like a charm. Here it is. Now, again, nothing's done here, right? All we've done is sort of defend some lateral levels. We haven't really gotten the drive higher. We haven't gotten a break of the weekly opening range or anything yet. So we do need sort of a pump in momentum. The economic docket sort of quiet. Next thing you have on tap isn't until tomorrow. You get those retail sales numbers for December, as well as the Michigan surveys. But you know, there's a lot of other things going on in the background, whether it's the tech debate or whether it's the presidential inauguration risks or whether it's the impeachment. I mean, the markets are being bombarded. And I don't know if you guys have been paying attention, but the last couple of reports Jamie's been writing have been stellar. I love these charts that he's throwing out at you guys. So whether it's the call option volume, which is continuing to spike higher, the dealer gamma exposure from yesterday he was talking about a couple of days ago, he offered you guys that comparison bubble of where Bitcoin is with previous levels. The markets are certainly stretched, right? Irrational exuberance, we could debate that, right? We could debate that. And the thing we have to keep in mind is that how long that'll last is the thing in question here. Definitely this is going to be disorderly at some point in a lot of these moves that we're seeing. Going off on a tangent here, but you know, it's going to be something to behold for sure. So we just need to keep tight. We'll look at the SPX and some risk in a moment, but for the dollar, really, I just need to pop through the weekly opening range, some sort of uptrend or downtrend rather break to get the pop higher. Slope is just higher, right around 90.85, and again, that 2017 low converges on those down slopes right around 91. Near-term support hasn't changed. The weekly opening range confirmed that 89.93 level. We're going to raise our near-term bullish inval to that heading to the close of the week. Remember, you want to be very cautious, always trying to trade these turns. Interestingly enough, right, you're seeing the dollar majors kind of diverge as well, where Euro is doing kind of its own thing. CAD not really being able to participate. Still seeing that dollar CAD drop, kind of break that upslope we were looking at. We'll look at that in a moment as well. But just use some caution here. It's still relatively early here in the month compared with all the event risk that's going on. So here's Euro. Here's Euro. Here we are on the weekly, and here's what it looked like earlier here. We'll go over the scalp in a moment, but beautiful, beautiful. I talked about this in the webinar Monday on Daily FX. Beautiful turn, 123.37. Loved it. Pull back, closed the weekly low with a nice long tail. So here's the pullback. 121.45 was the first level we were looking at. We broke that today. We're breaking that like today. This is the weekly chart, so yeah, I'll show you that in a moment. But I just want to highlight this slope. Same 25% line that we've been following. Resistance, break, acceleration. We're there now too. Don't get faked out. But if we get below this on a weekly basis, I do like 120. Okay, I do like 120. Look at the, pretty strong divergence signal. Both reference points below 60 on the weekly chart into the high, right? Confluence uptrend resistance. Love this pullback. This is the first area to start being careful, to really look for possible. If this is going to be a fake out, this is where you look a little bit of a recovery and then maybe move lower. I don't know. That's not my favorite scenario, but this is certainly the first area to look. So what does it look like on the daily chart? Well, again, there's that 21.45 level. Here's today's break, just lower, upslope support, that 2017 high. Remember the DXY, we're looking at the 2017 low. Real nice symmetry here. So focus on 2092 today on US trade. Look for a reaction there. Daily closed below, needed to keep the momentum sort of going for the downside in the euro. Here's what it looks like on the intraday. 2092, 2017 high, downslope support for the current pitchfork we've been following, right? So nothing's changed. It's the same setup. Here's what it looked like back on the 12th. Here's the weekly opening range, the 2020 open, 2020 close rather. Nice zone. Looking for exhaustion ahead of that 50. I've since removed that 50. We need to remove this as well. We got a new low in place at this point. Just wanted to show you how this panned out though. Really beautiful play. Hope some of you caught this. So move lower. That was your first level. Take a little off 21.45. Bring stops down. Next stop down 20.92. That's going to be the big level. Now, for the sake of argument, if something happens and this thing reverses, closes back above 21.45 today, problematic for me. Problematic for me. So just throwing that out there. Like if you're short from anything sub 21.58, that's sort of a 21. These highs rather 21.68. That's sort of, I wouldn't want to see things get back up into this zone. We'll reassess if we get into 2092. If that breaks, expect acceleration. Remember, a break of downslope support, typically the sharpest part of the decline. So I do think if we get below that 20 is pretty, it wouldn't take that long. Let's just say that. But it all determinant on whether or not we get 2092 and what that pivot looks like. Questions on euro? All right, number 2, dollar yen, dollar yen, dollar yen, dollar yen. So this one has been too clean for comfort, I want to say. Here's what it'll look like. We've been following this one pretty intently. Here's what it'll look like on the 10th. It was heading right into the open of the week on Sunday. I told you guys we're looking for resistance, possibly into that upper slope. You're constructive above 103.51. It doesn't get much cleaner than this. It doesn't get much cleaner than this. So we rallied into it. We marked the divergence. We warned you back on the 12th saying watch out. First break of the weekly opening or your weekly open saw an accelerated drop. We turned just pips ahead of that the 50 down here. Median line, nice rebound here, right back into that 50% retracement at 104.13. Very similar scenario, right? Weekly opening range is set. It's Thursday. If this collapses, you're still looking for support along the median line. But even if this breaches, I don't see a kind of a functional trade here from a trader standpoint if you're not already in this. Like even if this breaches, there's no respectable stop. I'm not going to put a 50 pip stop on dollar yen when key resistance is 50 pips higher. So I'm not really sure there's a play here for any of us if we're not already involved on dollar yen. But I do like the structure. It's been pretty clean. I always tell you guys, dollar yen's not typically, doesn't really play well with me, at least humbly speaking. But when it does, it'll hold for a while. Okay, and that downslope held for a nice little while there. There's the breach. Didn't quite get a test of it as support. Nonetheless, that upslope looks pretty decent. We came off median line resistance, came off the median line. Next strike up would be that 104.50, 104.75 level. Now, watch risk, okay? The dollar, if we do see some more aversion or some concerns or things start to get a little bit hairy, dollar strength, I think, should at least keep this thing buoy, but we'll have to see if things get bad. Yen Haven could catch status too. So we'll keep this on the back burner, but all things held constant, just watch for a break of this range. It's pretty clear, right below resistance. All right, Aussie, number 4. Insanely clean. Insanely clean. Here's Aussie from last night's update. So kind of give you a roundabout all over again. Remember, for anyone who's new to the room here, I always give you alternating charts. So if I give you the Aussie 3 set, next update will be maybe just the 2 hour again, but the one after that will always be a preset. So if you don't see the weekly charts or the daily charts, it's always one click away. Anyway, I digress. Here's Aussie. The justification for us starting to look for resistance altogether was based on that resistance zone that we were coming off of. One was at 78 into 78.36. We peaked right in there, 78.20 and change. Beautiful spot. So we were on the lookout right into the start of the week for possible pullback. You got the start of one, kind of pumped back. Long story short, from 1,000 feet up, I want to see a close sub 76.35, which sort of validate sort of a near-term reversal. Also, into the close of the week, watch for a momentum push back below 70. Haven't gotten many of those here. This was the first breach of 70 since here. Last time we saw a break below 70 was here from overbought conditions, albeit not that much. Got a decent pullback on that mark back in 2011. So point being, it's the same trade. The exhaustion may be upon us. We're looking for signs of it. Here's what it looks like on the daily chart. Right? Again, divergence into the highs. Key resistance zone, 78, 78, 36. Your monthly opening range is just nestling up right into that key resistance. Simple setup. We like these, simplicity. Break to the upside, you've got clear into 79 and change. If we buckle below 76.35, again, that's the December swing high there. Again, you risk that bigger decline. We're already get a trigger in momentum. So basic 3-point breaks to the downside, not really seeing follow through in price. We need price start catching up. And the initial touch looks okay. We just need some follow through. This slope I showed you guys early in the week, I think right into the open. It's the same slope, and it's been pretty damn clean. I didn't really like where we turned from, but look at the resistance right into that parallel. 1 touch, 2 touch, 3 touch. If this is going to hold, you need to break below 76.66. You're looking at 76.25, 76.35, and then into this zone here at 76 handle. If this breaches, just higher is the objective weekly opening range. That would give you a topside bias or a topside or a bullish signal. But again, what are you going to do? You're going to buy into a major multi-year resistance pivot? I'm not going to do that. So for me, it's pretty clear. If it works, it'll work. I think we'll get a good play on it. Okay, we're looking for the move lower. I know Jamie's looking Euro Oz long. That's kind of Aussie short as well. So let's just see if we can't get some clarity here. Ultimately, at least we're starting to see momentum hold 60 on the intraday charts. Again, this was something I was looking at earlier. Don't want to stress it, but possible trigger break right here if we get a downside move. You know, how granular you want to get with this. One touch, two touch, three touch, four touch. Objectively on a near-term scope, that would also be a break. I just don't want to play so tight within the levels here, okay? Because this could go either way still. So guys, we're still super nimble. There's a lot of beautiful setups on tap. Anything you get, make sure we're not doubling down on our leverage yet. I'm still trading at 2/3 what I usually trade on leverage standpoint. And hopefully we can get a push on some of these moves here. It's Aussie dollar. Any questions on that? All right, Kiwi. So Kiwi update looked like this. Whoops. Descending channel formation, weekly opening range holding right below the objective weekly open. I think this one, well, I thought this one was going to be a clear-cut break some point to give us some directional bias. With the top side in this facet, if it were to breach, I know we're holding shorts there on the swing side, but if the top side were to breach there, I think he'd get 73.30 pretty quick. Okay, so we'll know if we're wrong. The downside, really nice zone here into 70.90. If we can get that. 71.10, 70.90. Just a really nice pivot in price. So no change on any of those levels as well. Kind of the same setup. Again, let me just take a top-down approach. Here's Kiwi turning right ahead of resistance, but on slope, right? Here's the pitchfork that we've been following. Here's that 50 line, or the 75% line rather, right there. Turns lower. Your monthly opening range setting up just above a major key support pivot. Whereas on Aussie, we're looking for the monthly opening range setting up right below resistance. A little bit different of an animal here, in my opinion. Monthly opening range setting up right above a key pivot was resistance, now support. 71.10, 70.90 is what I want to see give out on the downside there. Okay, questions on Kiwi? Pretty decent momentum profile. See if we can't get that kick a little bit faster. All right, that's Aussie and Kiwi 4 and 5. Last from that update was SPX, number 6. So here's what spoos look like, and I was kind of frustrated when I was writing this again yesterday because, you know, it made a break of that formation. Remember, we've been following this formation right to the high. It looked like it broke upslope resistance, but it quickly failed. Made a move, tested that former slope as resistance, and then it failed again, right? And even broke near-term downslope resistance. You'd have to expect, like, this could pop higher. There's really nothing, there's nothing here, at least from a response standpoint, that like screams collapse. But guys, it's the same level. It's the same level that we were talking about all the way back here, back on the 21st. It's 38.27. It's a short-term 1618, but it's been key resistance. Again, we just tapped it. Now it converges one more time on that ascending parallel. And again, this formation, this pitchfork has been in play. Here's the 240 minute, just to zoom it out a little bit, since November. It's the same setup. Unbelievable. Here's 2 hour. And now we can clean this up a little bit. I just want to show you how this panned out. Clean this up a little bit. Clean this up a little bit. And there you go. Anything northbound of 38.27, that high that we struck back on the 21st, we're just looking at slope from here. This is just a parallel, the same gradient we've been on. Takes you somewhere around 38.80. But it's gonna need to see a close. Here's the daily chart. We're gonna need to see a close here. This is kind of super precarious, but not a market you want to fight just yet. Questions on SPX? Steady as she goes, but at resistance. All right, dollar CAD from the previous update. Here is Looney. Little disappointing. You know, you got a break of the weekly open. You got a break of what I interpreted as the weekly opening range lows after that bounce yesterday. And then you did see a little bit of an accelerated drop. The thing is, I don't know if I'm being stubborn, but I kind of still, you know, I don't want to. I'm not expecting trend resumption lower. Let's just say that, right? We don't really have the justification just yet. I'm looking for structure. If this turns out to be low, I'll be kind of pissed off because I actually was thinking about this just before the webinar, but that's neither here nor there. Let's take it from the front out. Here's dollar CAD on the weekly chart. All right, and here's our last update here. So again, same setup as the majors, right into the close of, right into the open of the year. We struck and turned off of major weekly resistance, not or support in this matter. Not quite there. We turned just ahead of it. Again, it was 26.19, 25.79. The low registered at 26.30, so 10 pips off. And then we rebounded, looked like the initiation of something interesting. I marked 26.85 for you guys. That was the low we close. That's sort of the level we want to start to see base. You're seeing that. You know, we intraday, intra-week low, sure. I want to see a weekly hold above 26.85. Real subtle things you'll look for. It's not a major, you know, flag right here, but these subtleties have ended up, you know, tend to work well for me. So here's dollar CAD on the daily chart. Beginnings of something could be here. You look at something like this and you think to yourself, well, Mike, couldn't this just be a break of the median line, test of downtrend resistance? And this is a bounce off the median line? Sure. Could be the scenario, in which case you still look for another basic tag of 28.30. We're straddling the weekly, the monthly open, excuse me, 27.13 right here. We've made a move above, we made a move below, we made a move above, we made a move below. You know, it just might be worth it just keeping the powder dry on this one for a little bit longer. Basing is never a simple matter, guys. It's always a long, arduous process. There's a lot of fake stalls, fake starts, false starts. So you just want to be cautious here, but it's very similar to the same setup. So here's the intraday chart that we were following. And this is what I showed you guys earlier in the week. We had just ripped into that 618, really nice pullback, and it looked like we were going to start to see the makings of some sort of median line hold here, held for a couple of hours into the following day, actually, before the break, and then that was your weekly open. Technically, I was supposed to be bearish below this, but the response you're seeing here is very interesting. So again, if this buckles back into this, you know, back above those swing lows, we're gonna get and scratch this. Okay, we're gonna look for new slope. I don't want to start, you know, working too aggressively with anything yet. I have no clue, guys, that this is a low, but you get the picture. We'd start to look for new structure on how we could define the advance. And see if we get any parallel action here, which obviously that does offer some real, whoop, that was off slope, sorry about that. Not quite. And again, this is the assumption that this is some sort of low. I have no idea if this is a low. In fact, I was looking at this earlier, a basic retracement off the low has us below the 618 and below the 786. So like, a good risk to reward is there for a large return higher. Is the justification from a technical standpoint there? Am I willing to eat a 50 pip stop on that drop there? I don't see it there just yet. It's kind of a big call for me. So we'll see. Again, apologies for the lack of conviction on some of these, but such is the scenario and such is the environment that we're in right now. Got to be a little bit more nimble. So dollar CAD, markings of a turn, or is this thing just about to resume? At the end of the day, long story short, this thing buckles below 25.80. There's really nothing, in my humble opinion, until you get into the 24s, 23.50s. Much like some of the major setups we've been following, where if we were to drop into these zones, there's some trouble ahead. There's some trouble ahead. So that's dollar CAD, number 7. I can't believe I left out sterling, so I'm going to drop that in real quick. I haven't touched it this week. Again, just a disclaimer, I'm not a fan of how to exactly trade this, okay? I like where we are broadly speaking, and that's resistance. But then again, guys, I've been saying that for 5 weeks, literally since December that 14th. The region's 36.21 to 36.75. It's a 50 pip zone, literally for 5 weeks. You could argue almost 6, where what the hell is that? If it's going to pop, it's going to rip. There's nothing on my charts or radar to like 139, but till it does, I'm not going to buy into it. So I've been kind of like taking stabs, trying to get in the shorts. We tried it a couple times last week. I haven't done anything here. It's the same setup. A little frustrated with it because I love sterling, and I thought into the beginning of the year, oh, this whipsaw action was going to make some sort of pivot, either the correctional breach and rip or just a bigger correction, which was my favorite scenario. We did see a correction right into the start of the year, big outside reversal or outside day. It wasn't a reversal day, but outside day nonetheless, took you to support, and then we just pushed right into the range highs for the month. And here you are with a big whopping monthly opening range right below resistance. Objectively speaking, from a trade setup standpoint, that's kind of a decent play, but the range is so big, we're not getting these conviction breaks. Sterling breakout would be opposing to the broader prevailing DXY, kind of the picture of the dollar, maybe finding some base, maybe some anxiety in the markets, fueling some covering. Maybe you get some of that dollar buoyancy. So the topside breach isn't really kind of the run you want. So one more trade, we've got to just continue to track. Here's what it looks like on the intraday. All things held constant, we're just pressing uptrend resistance, uptrend resistance, uptrend resistance. The pullback found support right at the median line, back into uptrend resistance, right? No change. Where was our last sterling update? Right here, 10th. So same slope on the uptrend. We've scratched this down slope because we already broke that on this breach. So we didn't get much success with that. That was basically this gradient, just for sort of visual reference. What's up? So weekly open, crack back below, will put you right back in the weekly range. This is not something I'm necessarily going to get too aggressive and trying to fight again, but all things held constant, key resistance is key resistance. As long as we hold that, I'm looking for something. I'm looking for something. Now, this is a consolidation range, and again, this slope, we had no conviction until we got those 2 tags last week and the previous week into the close of 2020. So I do think you want to give this some merit. And again, a breach of uptrend resistance would be pretty radical. I just don't see it happening yet. We haven't gotten that Momo break. All right. And in case there wasn't enough bad news on the last 2, 3 setups, we're kind of like sitting there in limbo. Here's gold. God bless this thing. You know, at some point, things will kick again. The assumption is still that the recovery would still be at risk. So even if you get a rebound from here, the drawdown to 1790, 1803, I think at this point, in my humble opinion, I don't want to say inevitable, that's just too cocky, but I really think you do get the last drive lower still. I'd be surprised if that was the end of it. Let's just say that. And this is such a sweet spot for me. 1790 into 1803. Obviously, we drove down below it here into the open of December, but even from a slope standpoint now, you can see it's the same formation we've been following off those yearly lows. Really nice pivot, pivot, support, pivot, resistance, even though it failed on that false break. That's a lower parallel right there. Questions on gold? By the way, here's gold on the weekly charts. If you were to trade, if you were trading gold solely off of the weekly close, it would have been one of the cleanest trades over the last 4 months I've seen in a while. Look at this thing. Despite the fact that last week, guys, we were as high as 1956, we're now trading over $100 lower. Radical, radical, but certainly gives us confidence, at least in the technicals. And by my part, I still think the risk is for another drive lower. Now, maybe not into the 17s down here, right? And we just noted on the daily chart that 1800, 1790 level, but you could envision a scenario again. Wouldn't put too much emphasis on this slope. It's only a 2-point touch, but that's such a great pivot that I think you get some more noise here. Get thinking more noise. Ideal scenario, any topside spike fails ahead of the monthly open. That's 1898. Downside spike again into 1800. You're looking for something. So that's near-term bullish inval. Objective yearly monthly open. That's your sweet spot. Hey, Marchin says, you're Aussie. Please, I'm wondering how Jamie connected the pitchfork for the 9-year trend line around 1856 or 15,006. So I'm not going to try to go in there and try to replicate. We operate on different paths. Let me just see what Euro Oz looks like here. Not a trade I've really been following, but I see the justification in it. Yeah, he's looking at the same 156.50. I have 156.22 with 2017 high day reversal close. Was a really nice pivot in price, right? Acceleration support, acceleration on both sides. Momentum grounding into 30. Interesting. Certainly an area to start look for. Marchin, I would need to do some surgical stuff on this. But essentially, in such a scenario, what you're looking for is a test of downtrend support. So actually, again, I'm still in expo mode for the last couple of weeks. So these are your ideal plays when you see multi-year lateral or whether it's multi-year or not, but even more power to you, multi-year lateral support. You look for near-term downtrend support into that zone, and then you start to look for the breach of near-term downtrend resistance. And it's a lot of words there. So let me just see if I have something I could put together here. Okay. Let's see this real quick. Okay, so parallels off this slope are offering some decent gradient, right? You look at the interior levels, support, breach, accelerate, break, acceleration, instant resistance, right? You're gonna get the raised ceiling every now and then, but decent 25%, 25%, 25% lower parallel. If we take a parallel of that slope, and then we extend it off the lows, you can see we're there right now. Weekly open resistance right there. And let's leave it at that. I could get, if I was, personally getting involved in here, I would get even more granular on the weekly trend basis and go just like super tight on this. Because you're trading such a critical support zone, you're looking for the first indication of a breach of downtrend resistance, right? So I need something that's pointing down to break higher before I ever try to fight a drop like this. I'm not a catcher of falling knives. My hands have been cut up too hard many times marching over the years. So I wear mesh gloves now, at this point, breach of anything downtrend near term would be encouraging. Ultimately, weekly open resistance break is what you'd want to at least start to mark something. You have a low to trade against to push higher. But we're essentially trying to call a low. For me, this is definitely on the radar for a reaction down here. You're pretty drawn down in price. It's been a pretty massive drop. Momentum isn't giving you anything more, right? We're still holding 30. But that's definitely a zone. I think both myself and Jamie were both looking for something here. Something here. Okay. You wanted to look at euro pound. Really, man? Euro pound? Interesting. That's support. That's support. Now on this one, uh, someone asked about this earlier at some point this year. But on this one, the thing I would also just highlight on that low. Yeah. Okay. That's the zone. I mentioned this for a reason. I feel like back here in November, into the start of December, someone was asking about this, and it kept on dropping 88.90, and it kept on dropping below 88.90, and you even got, weekly or a daily close below that. So open it up into the close lows. So give that shaded region um, some create. Oops. Like right there. Because on a closed basis, that's basically where it's at. That's basically where it's at. So again, very good identification, Marcin. Well done. These are some pretty decent levels. Both of these have dropped in. What was the other one you want to look at? Key, Sterling Key. Sure. What's funny with and I noticed this earlier in the month, but I haven't looked at this in a while. What's funny with Sterling Key is that last month's open was almost exactly the same as this year's yearly open. The December January open are like pips apart. So this is like the definition of indecision, of capitulation, could be range bound action, break of support, and we've been sitting there pushing it as resistance. This is the objective 2019 open in purple or magenta. Um, yeah, simple. It's just a simple. This is gonna crack. This is gonna crack one way or another. Now I've seen these be terminal, but um, I've seen them go both ways, to be honest with you. So That's pretty simple, considering that the December opening range never gave out, right? This is your December opening range, and we've been in contraction ever since. On a trade like this, Marchin, you could there's definitely opportunity to play the interior levels. They probably would look pretty decent, but I wouldn't be looking or positioning for the larger move until that gives out. Here's what it looked like. I guess someone had me following this earlier back in November. Pretty nice move into 85.30. Break out of that pitchfork, ugly as it was, did see that pitchfork offer support, form a resistance before pushing off. So you do have the initial break of downtrend resistance, but I'd still be looking for this consolidation break. Okay, we don't need that. Watch this. Watch this. I'd be super tempted to like just slap this on and go with it, but I'm not because I know what pair I'm working with here. And it's not that impressive actually. That could work. Let's work with this. It's a shift off of the lows, okay, from this year, last year and this. It actually looks pretty interesting. Once 100% extension would take up into 1925. Consolidation resistance, a little farther out than I'd like, but you know, basically this zone. I'll open it up a little bit. Obviously, this is right in this zone. So 191, let's call it. Okay, let me drop that low day close. Here's last year's low day close. Really nice hold there. And all right, here's what I'd be looking at, Marchin. This is super interesting now. That's your bullish inval on this immediate thrust higher. I know it's far from where we are now. Not, you know, obviously, if you're not in this already, you kind of want to wait for this. But looks like possible 5 waves up. Looks like possible upslope forming, all which are in the confines of the December opening range. It could be a really nice setup. It could be a really nice setup. It could be a really nice setup. I'm going to track this one. Yeah, super interesting. Might be worth a stab on a pullback. So near-term support at this point, you'd be looking for, I mean, that's your bullish in value. You don't need, I mean, ideal scenario, wouldn't see it drop quite that low. But that 618 does look good. Nice. Boom. On the pullback, 88, 48, 80, 89, excuse me, 88 max. Topside breach, you're looking for 92.53, this zone here. It's a quick setup for you there. Yeah, you're more than welcome. All right. So if there are no other questions, we'll go up and wrap it up there. Keep it light. There's so many things on tap right now. Keep it light. I've been kind of probing and dangling my toes in a little bit, but there's some big things afoot, I think, and we're just on the precipice of it. You got the inauguration next week. Cross your fingers, say a prayer, set your levels up, and best of luck trading, guys. I will see you on Monday on Daily Effects for the free session, right back here on Tuesday for the Nadex event, which again, let me just give you the guys the link for that. It's going to be a basics of obviously everything that we go over here all the time. You guys get me all day, but just a brief introduction into sort of confluence, resistance, support, fibs, and pitchforks. We'll go over those there. And I will see you back here on Thursday of next week. So best of luck trading, guys, and have a great weekend. Cheers.